Welcome to this Tax Justice Network podcast, looking at some of the findings of the 2020 Financial Secrecy Index and its relevance for Europe. I'm Naomi Fowler from the Tax Justice Network's monthly podcast, The Taxcast, and I'm speaking to the Tax Justice Network's CEO Alex Cobham and John Christensen. As a bloc, the European Union has on the one hand been very powerful in taking some action against tax havens and secrecy jurisdictions, but it hasn't really dealt properly with the fact that it is itself one of the world's biggest problems in this area.
The EU's performance on the Financial Secrecy Index and on financial secrecy generally is pretty much a mixed bag. We can see areas of real leadership. For example, successive revisions of the Anti-Money Laundering Directive have seen the EU really at the forefront of the emerging standard for transparency about the beneficial ownership of companies and trusts and foundations, although even here there's still a lot of work to do in making sure that those registers are fully public. But we also see some real missed opportunities, mistakes and hypocrisy. The obvious missed opportunity is the continuing failure to require public country-by-country reporting by multinational companies, which the evidence shows would be a very substantial move, not just against corporate opacity, but in curbing the profit shifting of multinational companies that we estimate is responsible for about $500 billion of revenue losses globally each year. In terms of mistakes and hypocrisy, the most obvious case we can talk about with the EU is its blacklist, its list of non-cooperative jurisdictions. Now, on the one hand, that's a step forward from the previous very political lists that tended to be very opaque themselves and based on very much a question of political power of jurisdictions to get themselves off the list. They've now followed the Financial Secrecy Index in using objectively verifiable criteria, but it continues to fail in two important ways. First of all, those criteria have been fudged so that major secrecy jurisdictions that are clearly non-cooperative, like most obviously the United States of America, have been excluded by really very, very obviously bending the lines to suit them. And what's left are predominantly small economies, lower income countries that the EU hopes to bend to its will. And of course the EU excludes from the list EU members who we know are responsible themselves for around a third of the global threat posed by financial secrecy when taken with their dependent territories. And in fact, the EU itself faces a financial secrecy threat globally, and about a third of that comes from its own members. So the failure to address the behaviour of EU members is really a very serious stumbling block for us giving the EU a pass mark. There are opportunities there. They've shown some leadership. They really need to follow through.
Yes, so the European Union has a lot of power to act as a bloc in this area, and that would have a big effect on the rest of the world. So what should the EU do now?
The EU now faces a great opportunity because the United Kingdom is moving outside. That's important for two reasons. Firstly, the European Union, even following its pattern of not holding its own members to account, can now hold the United Kingdom to account, can require that it meet standards of transparency and financial regulation that it hasn't enforced before. And secondly, now that the UK is not going to be inside the EU lobbying in favour of financial secrecy and on behalf of its own dependent territories, who are among the most aggressive financial secrecy jurisdictions in the world, the EU should be in a position to reach agreement on higher standards and then to push for them to be adopted around the world. A key question there, looking outside, is whether the EU can stand up to the United States and demand finally that the United States begin to exchange information automatically on the financial accounts of other countries' tax residents in the way that, through the Foreign Accounts and Tax Compliance Act, FATCA, the United States has effectively imposed on all other countries. Only the EU has the power to do this. Up until now, it's been FRIT, but the chance is there now, and perhaps easier to achieve without the UK inside the EU. Internally, in terms of its domestic policies, a key step for the European Union will be to deliver, finally, a requirement for public country-by-country reporting by multinational companies to produce transparency in that area and really curb the excesses of profit shifting that we see, and to reach a comprehensive standard of beneficial ownership transparency, requiring public registers, so public information available freely in an open data format for the beneficial ownership of companies, trusts and foundations registered in any EU member state. In that move, the EU would really set a comprehensive global norm that would eliminate a large part of the use of anonymous legal vehicles that underpins pretty much every major case of tax evasion, of corruption and the laundering of the proceeds of crime. Again, there's a real opportunity there for the EU to take leadership. The question really is simply, will it do that?
Switzerland's been ranked the number one world's worst offender by the Financial Secrecy Index for years, but this time it's gone down to number 3, which is still bad. But why is that?
Switzerland is one of the big 3 financial secrecy threats, along with the Cayman Islands and the United States, and those 3 have topped the rankings for a number of years. But the big difference this year is that Switzerland finally is moving in the right direction, and those other 2 are not. And so Switzerland's managed to reduce its secrecy score, in particular by engaging in a much more wholehearted way in the automatic exchange of information about foreign bank accounts. So it's a real step forward against Swiss banking secrecy, notwithstanding the fact there is still a great deal of secrecy to be addressed. We should recognise that real progress, and especially at a time when Cayman and the United States, the other members of the top 3, are going in the wrong direction. So that's real progress to be welcomed. At the same time, of course, those 3 remain far ahead of all others. Between them are responsible for nearly a third of the global provision of financial services exports, financial services for non-residents, and that means they continue to be particularly dangerous.
And John, we've seen a few surprises. Luxembourg is one of them.
Yep. Some of the worst offenders have actually moved in the right direction. Luxembourg ranked 2nd in 2009 with a secrecy score of 76, which was pretty damn bad. Now a secrecy score of 55, and it's progressed to 6th on the ranking. So it's definitely moving in the right direction. Still not good, but a damn sight better than it was 10 years ago. So I think it's time to drop to the, you might remember we called Luxembourg the Death Star of tax havens. I think we can drop that and perhaps apply it now to Cayman.
Right, Cayman now is number 1 on the Financial Secrecy Index, and it's also just been blacklisted by the European Union. Thanks for listening. You can read more on www.financialsecrecyindex.com.